A very good morning and welcome to the week ahead video for Monday, the 15th of January. Now, the broad outlook this week is that the market is generally uncertain with pockets of opportunity. So the uncertainty is regarding the path of US rates. Is it the three rate cuts that the Federal Reserve see, or is it the 5.5, 6 rate cuts that the short-term interest rate markets see? And on top of that, we've got geopolitical uncertainty in Taiwan, China, the Middle East, all of which is resulting in flows in oil, gold, and bonds. So we've got quite a confused market, but amongst it, there's some pockets of opportunity, particularly in the FX space. Now, looking on the 16th of January, it's where markets really start moving, is we're going to see some UK employment data. Now, the outlook for the UK is that the Bank of England Bailey has been continually stressing the need to fight inflation, to keep doing more, and all that's just been keeping the pound supported. However, short-term interest rate markets are seeing over 4 rate cuts this year. And what we need to see is if we start to see UK data weakening, so in other words, if we see the unemployment rate rising, average weekly earnings falling, and average earnings are falling, and if we see the payrolls numbers dropping, then what we'd expect to see is the pound falling. And I'd look to probably see the pound fall against the yen. Broadly speaking, we're expecting the Bank of Japan to exit negative interest rates. And that was affirmed by a Reuters sources piece on Friday. And all of that should keep the yen bid. The only problem with this outlook with the yen is that timing the Bank of Japan's monetary policy has been notoriously difficult over the last 12 months. So timing is key. But pound weakness on a jobs miss does look like a high probability opportunity. We then have German ZEW data. The broad outlook for the euro has been quite negative and markets are expecting weaker economic conditions. That's been weighing on the euro over recent days and weeks. So if we saw surprise upside in German sentiment, that could give the euro a temporary lift. Not a big opportunity, but potentially a short-term one. Canadian CPI data will be important. The Bank of Canada is at a sort of a neutral place. And if we start to see inflation moving back up higher, surprising markets to the upside, then look for upside in the Canadian dollar. A big miss in the CPI print comes in below 3.2% year on year, below minus 0.5% on the month on month. Then look for CAD weakness. Now, if we saw sort of pound strength, then you could look for a pound CAD upside. There's a nice continuation head and shoulders pattern on the pound CAD. Or if we saw a big miss in the data, then CAD yen downside could also be suitable, notwithstanding the caution I've already mentioned about timing Bank of Japan policy. Moving into Wednesday, we have Chinese GDP and Chinese retail sales data. Broad outlook with China has been quite negative from many analysts. And the big problem with the China trade is that a lot of investors are very sort of cautious about investing in China with its pivot towards common prosperity and the prospect that China's government could intervene in Chinese companies, potentially impacting their profitability and direction. So investors are quite cautious about investing in China. We've been seeing that weighing on sentiment for weeks. And there doesn't look like any turnaround right now. But broadly speaking, investors are expecting the Bank of China to cut interest rates to keep stimulating the economy. So it'll be interesting to see how the Chinese data goes. If it's a big beat to the upside, then look for upside and probably a proxy, something like the Aussie dollar, which is a good proxy for Chinese stocks and for China's economy. UK CPI data, very important here for the UK. The last data point out of the UK was a big surprise in inflation data to the downside. 3.9% for the headline versus 4.4% expected. That took the pressure off the Bank of England. If we see something similar this week, 3.4% or lower for the headline. If we see the month on month coming in 0% or lower, then look for downside in the pound and look to pair it with another strong currency. Could be the yen, it could be another currency on the day. Eurozone inflation data out. That's the inflation reading for the Eurozone. However, the issue here is the final reading, so unlikely to impact markets much. US retail sales, significant how the US consumers doing. If we saw a big upside surprise, then that keeps that sort of need for the Fed to keep hiking interest rates possibly, and pushes back against the three rate cuts narratives that the Fed's been giving. But a big miss here, then look for dollar selling. And the market will be very sensitive to a big miss. If the US consumer is struggling, then that's a good indicator that the Fed will need to cut interest rates and will be more affirming towards even more rate cuts. So a surprise, miss is really what to look for there out of the US data. Aussie employment data, inflationary pressures remain in Australia. If you just take a look at the monthly CPI indicator, and if I just see if I can have a look here on other countries, and if you look at Australia, you can see that Australia's inflation is still quite high, 5.4%, and the monthly inflation CPI indicator still relatively high. It's more than double the RBA's target. So strong employment data will also be seen as inflationary. If you have a lot of people in work, that means they can pay higher prices. It also means they can demand higher wages, inflationary. So strong labour market, look for Aussie upside. If it's a weak labour data, in other words, unemployment rate, if it comes in 4.1% or higher, if employment comes in below zero, and if we see participation rate dropping, then look for downside in the Australian dollar, and also the opposite if we see upside quite evenly balanced at the moment in terms of expectations. Jobless claims data for the US will be interesting. Of course, US labour market in acute focus, and the strength in the US labour market has been adding to the uncertainty over US rate paths. We've seen, particularly the non-farm payroll, the last one, we saw, a relatively firm jobs print, and then we had a big miss in the US ISM services PMI data. So a bit of a confusion. So look here, we've only got the initial and the continuing jobless claims data really coming out of significance. So if we see a big miss there, if it comes in 212,000 or higher, if the continuing jobless claims comes in above probably the prior, then you would look for downside in the dollar. Okay, because obviously more, a higher number here is negative because more people are claiming unemployment benefit. Okay. Then we've got Japanese CPI print likely to follow in line with the Tokyo CPI print last week. Inflation is falling as well in Japan. If we just take a quick look at that, if we see that sort of continuing to drop lower, 2.8 was the prior reading. Expected this for the core was the prior reading at 2.5. So if that comes in like 2.4 or higher, it puts the pressure back on the Bank of Japan. So expect the yen to strengthen. We've seen a series of data points just taking the pressure off the Bank of Japan recently. And also that very sad earthquake in Japan meant that the Bank of Japan would be less likely to exit negative interest rates. Just want to be more cautious, don't want to shock the economy more than it has to, whether it's struggling to come back from the earthquake. However, as tragic as it is to those individuals involved, of course, broadly speaking, Japan is expected to, be able to weather that storm of the earthquake and pull itself back up. But it is just giving the Bank of Japan a bit of caution. So the best opportunity would be a high print because you'd like to see yen strength return. A low print just is in line with the recent data we've been seeing. UK retail sales data out on Friday. And that will be, again, very important in line with the narrative we've already mentioned with the UK. Big misses, then look for pound selling. University of Michigan sentiment preliminary data, again, very important data out there for the US. And if we see sentiment falling in the US, that will be dollar negative. And some analysts are very sensitive to the Michigan data because they see the retail and the Joe public who fills this University of Michigan sentiment release in as more sensitive to price shifts and the economy than big businesses. Big businesses, they project their corporate spend 1 year, 2 year in advance, and they plan it all out, whereas consumers respond much more quickly to changes in the economy, and their personal spending will alter. So important print in terms of how the US economy is doing. I think I missed Canadian CPI, which is a big one, and that is on Tuesday as well. I'm not sure if I did miss it, but just in case I did, remember that the Canadian dollar is in a sort of quite equal part, and if we see a big miss to the downside, then obviously look out for CAD weakness. That would be a potential good opportunity. Okay, folks, that's what we're expecting for this week.